Hello, everyone. My name is Nathan. Good morning, everyone. So this today being Monday is the beginning of a new week. The markets just opened. I want us to actually take a look at gold and let's see what gold has for us this week. Basically, to do that, we have to look at gold from a higher time frame. As I usually always tell my students, is that uh, when you know where you are coming from, you definitely know where you are going to. Ignore the noise and focus on the journey. So basically, on for those who know me, I actually trade the higher time frame, and I get my market bias directly from the higher time frames. So that being said, now this is a daily time frame. We have to take the trend. Now we see gold is actually bearish. Gold has actually been bearish for a while now, but you don't use that as a yardstick to judge that it's been bearish or bullish. You have to actually frequently always check the market trend so that you're sure of the direction you are going. So as we can see, judging from this trend line, we see that gold is bearish at the moment. So now what now happens that you will see that at this point somewhere here, you see that gold did a break of structure here. This is a break of structure. Now let's do this. This actually at this point is sorry, just a minute. This at this point now you can see that the market is actually on sitting on a support, a bearish support basically, because the market is trending, it's trending bearish. So you can see that the market made multiple touches at this point, went up obviously, for a retest on the trend line for a continuation. And once the market breaks this place again, obviously what we know at this point that the market is actually going for a second break of structure. Perfect. So that being said, if you look at this particular place, hold on. Okay. If you look at this, you will see at this moment, somewhere here, there's this particular place is a fair value gap. So this is actually what is driving the market bearish at this point, this particular fair value gap. So now, I guess for now, we now know what is going on the daily. So what we have to do now is come to the 4 hour time frame. Now, you can see, guys, that a structure is actually formed here, basically. Look at this. This is actually looking good. Now, we see what actually drove the market down from this point, right? And now, that being said, you can now see at this point that the market, at this point, you can call this is actually a fair value gap. In other sense, I can actually call this place a supply zone. You understand? Now, let's do this. Now, if you take the first three candles, which is this one, two, three, and you mark out from here at this point. Great, perfect. Here you have a 4 hour supply. Perfect. A 4 hour supply, which immediately created this fair value gap. This very one you see here just beneath it. So you can see the market went from after the supply, with this impulsive move, created an immediate fair value gap. Let's see if we can mark that up. Yeah, okay. Uh, FVG. Now you see the market went down, and we always do a retest. Last week I actually took this trade because you see that the market went down, did a retest at the fair value gap. You understand? And at some point shut down. Yes, which is a nice move. But usually it's always best to wait for the retest. Then that gives us this particular move right here. You know, it did a second retest. A second retest here. You can see multiple rejections here. Then it did another major move to the downside. Which is where at this point created this break of structure at okay break of structure at that point. So now we are still looking for the buyers at the moment. We are still looking where the market is going to. You can see at this point here, the market it has done is actually at this very point here. The market is sitting on a support level, right? That is what actually drove this market up. What this usually happens at this point is that since the market is bearish on a higher time frame, most often of the times the market, especially when sellers take profits and move and leaves the market, you get this kind of reaction. Note the reaction or the behavior of traders is what causes the up and down of these candles. At a point, some people take out profit, some people enter the market. That's what gives this up and down or this bearish and bullish candles. So that being said, you can see the market went up to this point and actually retested the trend, the downward trend. You know, this is the first one. The second one actually tried multiple times here, and the market at this point, one can say that the market is going down, but there's something I also want to prove. I want to put to your notice here. You don't just take a trade because you see that the market is bearish on the trend line. Now, if you notice at this point, there's a fair value gap, a clean fair value gap at this point, a clean one, right? So this is, hold on, this is a fair value gap. Now, obviously, the market, this impulsive move created this fair value gap. The market retested at this point, sitting on support, went up to test the trend line, the bearish trend line, multiple tests, came back again to touch this fair value gap. Again, it went up again to retest this, the trend line, the bearish trend line. Again, coming back to test the fair value gap. So at this point now, what happens here is that this place automatically turns to an order block. So this at this point is already, there's a fair value gap there, obviously, and it's also at this point an order block, right? Great. Now, when you see an order block, what usually happens? That means that the big players in the forex, in the markets, hedge funds, banks, big financial institutions has actually at this moment placed orders here, buy orders at this point. So what happens next? I personally at this point will not take this trade at this moment because there's not enough confirmation for me at this point to do so. So the market, remember, the market just opened today. So we are waiting to see what happens next. And before the New York session open, they will now know the direction to which to trade with. Remember, always trade with the higher time frames. That way, you get proper structure, proper timing, precision on the lower time frames for entries. And judging from our stochastic here, you can see this particular setting I'm using for stochastic is customized. It's not the normal one that everybody know. You can actually join my trading community, to learn the proper strategy I use on smart money concepts to where I get accurate trades such as this. So now you can see that stochastic is still saying the market is going down. True. So at this moment, the market is still bearish because if there was an EMA attached to this chart, you would actually discover that the market is on a downtrend at this point, at this very point here. The market is on the downtrend. So at this point, I would actually say we wait and see what happens next, and eventually we'll take a trade from here. But at this point, I don't have enough confirmation at this point to actually at the moment take take a trade. So basically now, honestly, I usually don't go down to the lower time frames. That is my personal style. Remember, every trader is good, every trader is unique in their own style. It actually, what actually matters if is profitability, you understand, win rates, but for me, I really don't bother for the two lower time frames, especially at this point where I have not seen a clear entry. Because now, one, the market is actually retesting a trend line, a bearish trend line, and other block just formed, and if you look down here, you can actually see a demand here. So it's not a good time to trade. But if in the case where I now get something like this, just a minute, no, and I get something like this. If at this point the market breaks out from, okay, hold on, please. If the market breaks out from here, right, this particular candle, it breaks above the bearish trend line, creates a new candle on 4 hours, and I also get an order block, a fair value gap, a change of character to the upside, yes, I'll take a trade directly to the upside. But at this point, none of that has been done, so I don't think this is time for me to take a trade. So basically, this is what we have for today on gold. And definitely the market is going to give us what we want and we'll eventually take a trade. I'll keep you guys posted. I will post another video uh, when the trade actually forms perfectly for us to take a trade. So that will be all for now. And I hope this video does you well. Please like the video, subscribe to the channel, share the video to people. You can actually message us to be part of our trading community, which I will call NOV trading community. We are the gold diggers community. Basically, we have a WhatsApp group and chat and channel that is very active. So join us and let's see what we can get out of the market. So that will be all for now, guys. Have a great one. Bye bye.